Overall apartment fundamentals in Cincinnati remain underwhelming, but there are some signs that perhaps the market may offer some opportunity. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Cincinnati update. Apartment fundamentals in Cincinnati aren't bad, but they certainly aren't spectacular either. Our occupancy as of Q1 measured 95% even. That's down a little bit from the recent peaks, but generally pretty much on par with what we've seen in recent years, and probably a sustainable number. Year-over-year rent change for new leases measured 2.1%, well below the U.S. average. And again, that's down from previous peaks, but not too severely, and generally pretty stable over the last year and a half or so, indicating that perhaps the market is hitting a stabilized, sustainable growth rate. Behind these steady but unspectacular apartment numbers, we see some steady but unspectacular job growth numbers. The job growth rate hasn't been brisk, but certainly has been steady. And perhaps more importantly, job growth is coming in at a better clip than in the previous cycle leading up to the recession. Job growth trended around 10,000 or so annually in the mid-2000s, and since in the last 3 years is averaging a pace of north of 15,000 jobs annually. Most recently, the Metro added 15,000 jobs, and that expanded the job pool by 1.5%. That's a very average, unspectacular number, but again, if you're looking for positives, it's better than what we've seen previously, and we're seeing some consistency, which is good. So what we're seeing is that Cincinnati is showing signs of becoming a market that's stable, consistent, and steady and reliable, and it's also a market that does not have a lot of institutional grade apartment stock. Now, those things will not necessarily match the investment strategy for every apartment investor out there, but it may offer opportunities for some. And for those that it does match the strategies for, when we look deeper and drill down into pockets of opportunity, one that really jumps out is the urban core of Cincinnati, the central Cincinnati submarket. Now, while urban core submarkets have been hotbeds for apartment development all across the country, that really hasn't been the case here. There hasn't been much apartment construction to date, and yet we still see the really strong apartment fundamentals that were characteristic of a lot of downtown submarkets prior to the big development spree. Here in central Cincinnati, occupancy is very tight at 97.3%, and it's been consistently in the 97 to 98% range, and rent growth consistently strong as well. Most recently, same-store rents for new leases were up 4.9% year over year. So the core of Cincinnati does have some nice demand drivers, the central business district, some major sports stadiums, University of Cincinnati, as well as Xavier University being nearby. So certainly some positive drivers that may suggest some opportunity for new development going forward as long as those numbers remain reasonable. For the market overall, though, we think that what we've seen lately remains a story going forward. Steady but unspectacular, occupancy around 95%, annual rent growth of around 2%. Those numbers look sustainable for the next few years. And that wraps up for Cincinnati. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.